Hi y'all, welcome to the first episode of my NAFA-U series. Here we're going to talk about financial education. But first, a quick disclaimer. NAFA stands for not a financial advisor. I am not a financial advisor. This is what I have learned over the past several years and what I wish I knew when I was younger and what I want to share to other people. But make sure you're doing your own research so that way you can be successful. This is not a sponsored video by any stretch of the imagination. As you can see, I'm pretty new at this. I did my research mostly through YouTube, reading, and NerdWallet as well, comparing some credit cards, brokerage accounts, and robo-advisors, which is what we're going to talk about today. We're going to get started by talking about credit cards really quickly. I've got 3 recommended credit cards for you. The first one's going to be the Citi Double Cash Card, where you get 2% back unlimited on everything. This card has no fees or anything. So basically, you use it, you get 2% back. You use it, you get 2% back over and over and over and over. It's up to you what you do with this. You could tie it to a savings account. You could tie it to a brokerage account. You could tie it to your family account. It's whatever you want to do with it. It's your money. You're getting 2% back, which is really close to what inflation is. So it's basically just giving you a little bit back of what you're spending. The second one is going to be the Acorns card. As many people know, Acorns is advertised a whole lot about rounding up your money. Well, if you use their credit card, it's done automatically. And there's some other benefits to that you can do some research on their website and on NerdWallet, which I will put the link to NerdWallet in the description after everything's uploaded. The third one is personally the one I have, which is the Fidelity Rewards card. I actually just recently switched fully over to it, got rid of my Best Buy card, which I've been using for years. And I decided that I wanted to tie my rewards into my wealth. And hopefully I can teach that to other people and my kids one day. So how you do this is I tied it into my rollover IRA personally, but what I'm going to talk about for you guys today is robo-advisors, okay? And the first one I'm going to go into, I'm going to roll off of Fidelity Go and go the Fidelity card and go straight into Fidelity Go. I guess I gave that away already, huh? The Fidelity Go is actually a robo-advisor where Fidelity takes at least $10 and puts it into mutual funds and ETFs. There is no fee all the way up to $10,000. My recommendation, or what I would do if I was in that situation, again, is I would get the Fidelity card, I would take the 2% cash back, tie it directly to my Fidelity Go account. That way I know every time I get 2,500 points, that's rolling straight into making me more money. All right. So that 2%, instead of just using it for gift cards or buying more stuff, I'm making money off of it. That's the same with Acorns. Acorns is going to round up your change and it's going to roll it into their mutual funds and stuff, right? And then with the double rewards, the money they're taking, if you tie that into like a brokerage account or a savings account, you're either going to get interest, which is really low right now, I wouldn't recommend it, or you can put it into ETFs, stocks, use it to pay bills or whatever it is you feel like you need to do. It's basically you're just making 2% back on everything, all right? Now, the main thing about robo-advisors is it's there to get you started. This is to be a super, super passive for you. This is not something that necessarily is long-term, and it's not going to do everything by itself. You're getting 2% back, or with Acorns, you're rolling up your reward, cash and change. So this is not an abundant amount of money that's just going to make you rich overnight, okay? We're going to go into other ways of doing this later on, but this is all about getting started. All right. The same thing about my YouTube channel. For years, I wanted to do YouTube and I just kept putting it off. I had to be perfect. I had to be perfect. And that's how we end up with episodes like this. Right. I finally was like, I just got to get started, get these videos up, start getting it out and practice and get better. That's the same thing you need to do with your wealth. You need to get one of these cards, do some research of your own, figure out what's going to fit what you need. Get yourself started and start building from there. All right. So I'm going to go over this really quickly one more time. The 3 cards that I found to be the best for just getting started: the Fidelity Rewards, which is the card I personally have, But again, this is not a sponsored video. Secondly is the Citi Double Cash Rewards. And thirdly, it's the Acorns card, which does your change roundup. And then on top of that, you can take those, you can tie them into brokerage accounts or whatever you are interested in investing in, and just let it work. Once you learn more, you can start changing everything around. Like with the Fidelity Go, obviously at $10,000, as I mentioned before, there's fees that kick in, which is $3 a month. And then when you get to the next level, it's a percentage, which is really the same as having an ETF or a mutual fund anyways. So it's not a bad idea if you do your research. But again, some people don't want to pay those fees, or they just want to just make money. But we got to get started. I think they say 87%, you have to double check this, but I think 87% of people in the stock market lose money because they're trying to play the market. At the end of the day, you just got to be smart, all right? Thanks for watching the episode. Please subscribe, smash the thumbs up button. I will see you in the next episode. Have a good one.